for sure. Right? But I think, where did I put it? What we did the last time was a bit of information about the swing points, right?
Yes, we are talking about the swing points, what we mentioned being equivalent to the resistance level, and then the support points. Yeah, this is correct.
Right, and as you can see, that is correct. And as you know, bearish engulfing normally forms at the swing points, which is the resistance.
Yes, the
this one.
Yeah, the bearish forming from the support and yeah. Yeah, it's like it's like an image. Yep.
Right. So usually, whenever we see candles make this type of move, most naturally you could have opened up a sell position. Right. Now this is a support, and as you can see, no other candles went below it. Right.
Yeah.
It's a very strong support. So with the support, we have the bullish engulfing, small red, large green, right? And after this bullish engulfing, most naturally, you would have opened up your buy position.
Okay.
Right? So it went all the way right to the resistance level, and it broke out and went past it.
Okay.
But at least you would have made some profit all the way to the resistance.
This is 1.16648.
Say it again.
I'm just looking at the pips movements here.
The pips?
Yeah, from 1.16648 to 1.18046. Okay.
Okay, so if we were buying, let's say this was our entry, I normally don't work with these off numbers, but I just round it up to maybe like 650.
Yeah.
Right, so from 1.16650. So what the principle of content pips, every time we add 100 to the number, it's 10 pips.
Yeah.
Right? So if we went from, let's say, 1.16650 all the way to 1.18050,
yeah,
that's a big move, right?
Yeah, that's
right? So
that's a 20. Yeah, that's 20 pips. Yeah.
20 pips. You sure?
Yes.
Well, let's find out, right? Let's find out, because one of the ways that we could have done it was to go on our calculator, right? So that pair was Euro USD.
Yeah.
Okay, and we saw the entry was roughly 1.16.
16650. And a close of
1.8050. Let me just round it off to that amount.
Oh, hold on.
Right. So we have from 1.16650. So from 650 to 750 would have been 10 points.
Yeah, no, right? I think I think I'm wrong.
So it was more than 20.
It's a buy as well. It's not a sell, I think.
Oh, sorry.
Yeah.
So buy.
Yeah.
Okay. So it was 140
pips. Yeah. Yeah, that's what I was going.
we went from 16 to 18. So
Yeah, that's very
that's a big
large.
gap.
Yeah, right.
So if
That's
we had maybe like 1750, would have been closer. So as you can see, right?
yeah. That's
So
that's a big move. That one there.
big move. But the first one was a bigger move because every time we add, like, let's say 1,000 to the number,
Yeah, that's a big
right?
move.
It would have been 100 pips,
And the
right?
lots, so on the trading size, we did mention that we're going to for a 0.001. Is that correct?
0. No, the lot size that we're going to be using would be 0.01,
0.01. Okay.
which is
Yeah.
10 cents per pip,
10 cents per pip. Yeah. Yeah.
right?
That's much better. Yeah.
Much better. And that's going to be the smallest with the brokers that we're going to be working with
Yeah.
for the currency pairs.
Okay.
Right? As you can see, we add 1,000 to the number, it would have equivalent to 100 pips.
Yeah. Very good.
Alright? Very easy. So it's just to get the natural idea that every time when you come on your charts, you want to do your support level, your swing point, just to know where we can go, right? If you were in the opposite end.
Yep.
Awesome.
This is
Okay.
are you going for a 15-minute trading? Let me see. Are you going for a 15-minute trading period here?
A 15-minute?
Is this a 4 hours or a 15 minutes trading that you're doing period?
So this chart was a 4 hour.
4 hour. Okay, that's okay.
Right? So
Yeah.
the 4 hour, what I like about the 4 hour is that the information that it gives you are more clear,
Yeah.
and it would be for a long term. So most likely it would be in the trade for over 4 hours.
Okay.
That's the best way to do it. So if you go to a 15-minute time frame, most likely you will be in the trade for 15 minutes.
Yeah.
Okay. But this was the illustration we did the last time, so we were just, getting a refresher on it.
Yeah, I'm fine.
All right. So let's see what we're going to be covering for today. So I also sent you a link. I think you already have an account.
Yes, I already have an account with the Derive, the link that you sent. Do you want me to open that one?
All right. That link, right? Just before you open it, right? Now, that link, I was presented with a very warm and welcome news from that broker
Okay.
that I'm actually going to be partnering with them now.
Wow.
That's right. So I'm going to be partnering with that broker, and that means great things are ahead for sure.
Oh my goodness. Okay.
That's good. All right, so that will be good for us and good for you as well, because one of the things is that this is my first time going so big, because this was one of Elena's idea
Okay.
to partner with the brokers to be friends with them,
Okay.
right? And we did the application and we got approved.
Okay.
Right now, the link that I sent to you, I will have to consult Elena if she wants to switch the accounts to allow you to create a second one. I'm not sure, so that's something I will have to confirm, and then on our next session we can sign it up.
No problem. Because as I mentioned, I did open one account with Derive. So yeah, let's go and check with Elena about how she wants us to go with. Yeah.
Right, but that's one of the best news we have so far for this week for us. It's that great things are ahead.
This is good.
With us being partnered with them for sure.
Yeah, this is good.
But later in the meeting, I'll ask you some questions regarding to this information.
You mean for this one?
For sure.
Yeah.
For the partnership, for sure.
Yeah.
Just to get some, insights.
Yeah.
All right, so let's see. All right, so let's see what we're going to be covering for today. So we did the engulfings, right?
Yeah, the bars and then the tweezer tops and buttons. This
We
is
did the tweezer tops.
yeah.
Okay. All right. And we also did a little bit about support and resistance
levels. Yeah.
Okay. So we have a few more of these candles to go through for sure. Right. Now, what we're going to be doing today, right? We're going to be doing money management trading rules, okay?
Wow, this is getting interesting now.
That's right, money management trading rule, because on our next session we will be doing some trades and we want to know how to do like some money management, right?
Okay.
For sure. So that's what we're going to be doing for today. That's going to be 133. All right. Now, as a trader, right, every trade that we're going to ever set up will have two information, which is a stop loss and a take profit. Okay? Stop loss and a take profit. Now, let me go to the Discord just to show you what it looks like.
This is stop loss and take
profit.
Take profit. Okay.
Take profit, right. So basically take profit is the point in which you are in profit and decide not to make any more beyond that point.
Okay.
Right. Let's say, for example, this information here, right? So we will be going through these for sure, not to worry. But the idea of this trade is to sell, right?
Okay.
This is our entry point.
How can I be part of this group?
Okay, you should be part as soon as our next session, but I can send you the link now for sure.
Okay.
Right? Just to get you.
I already opened the account.
So, awesome.
Yeah.
Right. You should be part of the group for sure. But on our next sessions going forward, these information that you're seeing right now in the group,
so this
you will be setting them up.
So this is you instructing the sell,
right?
The sell or stop.
The sell stop, right? Mm-hmm.
It's you that is doing that.
Yes, that's me.
Okay, very good.
All right. So the group is pretty small, but it's going to be growing for sure.
Okay.
Because I have two groups. This is the bigger group.
Okay.
I have like 91 persons in.
Wow, this is good.
Right, but this is a smaller group whereby I do closer one-on-one with them for sure. Okay. Just like what I'm doing with you. All right.
Okay, very good.
Yeah. So for the money management, every time you enter your trade, you should have a TP, which is take profit, right?
Okay.
Now, sometimes you can have TP1 and TP2. Okay? And in addition to that, you want to have a stop loss. So SL stands for stop loss.
Yep.
Right? So at some point, let's say we were selling and the market is no longer selling, it reversed. The stop loss will help you to lose less money.
Okay.
Right? And in addition to money management, I also advise all the time to use proper risk management.
Okay.
Okay? Now, this is how this comes into the picture. So, our profits should be greater than our losses. Right? As you can see, we have 20 pips for position 1. Position 2, we have 50 pips. Right?
Okay.
And as you can see, we're only risking 30 pips to make all of this.
Okay.
Right? So that means every time, whenever we take a trade, we will be making at least 2 times what the loss would have been. Right? 2 times.
Yeah.
But
Yeah.
let me just get into it, get in a better picture. Okay? All right. So basically, we have already done how to set up the trade, right? Based on what patterns we're actually seeing on these charts, right?
Yeah.
Right? Now, we have a situation whereby, as traders, there's something called risk to reward ratio. Right? Now, in money management, in trading, and in our everyday life, you don't want to be risking more than what you can afford to lose, right?
Yes.
That's the aim. But at the same time, you don't want to be risking too little, well, too much, that is, to get little. So this is like a little illustration here to help us, right? So let's say we were anticipating the market to go up, right?
Yeah.
You see the risk ratio here
Yep.
in comparison to the distance from here to here,
Yep.
it's wider. So that means every time you win, you would have been 2 to 3 times better than
The risk.
the loss, the risk, right? So that means if we end up having a bad day by the trade that you had took the previous day, or maybe within that same day, because your reward were actually greater, you end up still being in profit.
Yeah.
Okay.
This is though very, very challenging because
You never want to have your stop loss.
because in reality, what you're doing is a forecast. Is
Forecast.
yeah, you're projecting what's going to happen, and this is why the reward, the reward bar is always something that is unforeseeable, but yeah.
All right, that's right. So what we do as a trader, because that information you just gave is true. So what we do is to rely on our technical analysis based on the pattern and what happened the last time. Okay, because looking on our chart here, usually what happened on the left will happen on the right, most times, right?
Okay.
So we saw the candles were at the top, they dropped to here, right?
Yep.
So that means once it hits this point, it's going to go back to the top because it happened here. So that's something that we can use to challenge making the predictions or the forecasts go in our favor. It does not most likely do that way, but at least based on the pattern, it's going to go back to that point.
Yeah, you said
Right?
you said if you go a little bit on the left of the swing point,
Okay.
on the left of the swing point, and if you see that support, that support level before the swing point, okay,
Where?
right there. No, go right there, right there. Go.
Right.
No. On your right. A little bit on your right. A little bit on your right. On your right. There. So if you look at that support point right there,
Right.
where you go slightly up, and then you drop again, and then you go, then up, and then you experience, okay, that huge drop that you see then that
Right.
brings you all the way down. So I think this is where the stop loss really plays a good role.
Right.
Yeah.
That's right.
Because
So that's how the money management
this
comes
thing
in.
could have gone down further, you see.
Further.
Yeah.
That's right. It could have gone further for sure. Right? So that's why the money management, whenever you're trading, you don't want to be having a wide stop loss, because sometimes it can go beyond that point
Yeah.
and continues outside of our control.
Exactly.
Just like here. We were expecting it to drop when it come back to the swing point.
Yep.
But it went higher and higher.
Exactly.
Some traders who don't use stop loss will eventually lose all the money they had in their account plus all the profits they would have made.
Yep.
Right? And most cases they consider that nature to have your accounts to be blown.
Yeah.
Right? So the idea is every time, whenever we open our trades, our stop loss should be a little bit behind the entry, okay? Just a little. Because trading is like, I would say, in an investment, right?
Yeah.
So if you're going to enter an investment, you don't want to be using up too much of your money to make a lot, because this investment can really multiply, right?
Yep.
So the idea in trading is that you can use a little to make this much. Okay? You don't want to be using up too much of your money, because if that happens and every time the trade goes negative, which is to your stop loss, you would be losing way too much. Okay? So that is why the risk to reward ratio, I normally tell everyone that once you're in profit, adjust your stop loss in profit.
Okay.
Okay? And that's what's happening here. We're not in profit yet, but we're looking at the reward so far, right? This is the risk, and this is the reward.
So you can adjust your stop loss as you trade. Is that what you're saying?
As you trade, perfect.
As you trade, you can always adjust it.
That's right. Okay. So, as soon as you're in some profit, because it was below the entry, what you can do is to put it in front of the entry, because let's say we were in a buy, we're expecting it to go up. We can put the stop loss in front of the entry, so that way we will be risk-free on the trade.
Yeah, you're
not going to be risking your money now.
Okay.
Right? You're risking the profits that the market is giving you.
Okay.
That's right. So instead of losing your own money, you will be only losing the profit the market is giving you.
Okay.
Right? So that's a big part in money management. To at least, once you're in profit on your trade, we put our stop loss in front of our entry point, so that we can enjoy the profits from the market. And if it dips, instead of taking your money, it only takes the money that it was giving you in profit. So your money is always safe.
Okay.
Right. So it's like having, I'd say, like an insurance on your money. Once you put your stop loss in profit, it's like an insurance. So you will always have your own money to trade.
Okay.
Right? Because, as you said, it's like a forecast. And sometimes the forecast can go bad.
Yep.
Sure.
Exactly.
Right. So most likely, whenever we're going to be trading, right, it would be advisable to use a risk to reward ratio. So we're risking $1 to make $2.
Okay.
Right. So that's the whole concept. So that is why here you saw that we had 20 pips, 50 pips, and we were only risking 30 to get all of this.
Okay.
Right?
Okay.
So let's just analyze another scenario, right? Okay, so let's just analyze another scenario here. So imagine, right? You take 10 trades with a risk of, let's say, 3 to 1.
Okay.
On all of the trades, right? I mean, when you win, you get $600, right?
Okay.
And when the market goes against you,
you lose 200.
You lose 200, right? So let's suppose you lost 7 trades and you won 3.
Yeah, that's 3 times. Yeah.
Let's do the math to know if you were a winner or a loser. Because remember, we lost 7, and every time we go, whenever we lose, we only lose $600.
Yeah.
My apology, 200. Sorry.
Yeah, you lose 200.
200. So it would have been 200 times 7.
Yeah.
Right. Yeah. So that means we could be losing at a cost of $1,400.
Yeah.
Right. But every time you win, because your profit, it is 3 times.
Yeah.
Right. 3 times what your stop loss would have been. So every time you win, it's 3 times what you're risking.
Yeah.
Right. So even though the wins were smaller,
you still
we got $1,800.
$1,800, which gives you 400 as your revenue.
Perfect. Now, as you can see,
profit, I mean.
Even though it's profitable, so even though we went down for 7, we won just a tiny amount. This is what money management comes in, right?
Yep.
So some days we will be losing money for sure, right? It's in the stop loss. But by the end of the week, based on how many trades we took, our profits were greater, right? Yeah. So it now depends on how many trades you would have taken versus how many trades. That would be like, depending on how many trades you take, would involve how much you won versus how much you lost.
Yeah.
Right? But the concept is that your reward should always be greater than your risk, because let's say you had $50 in your account, right?
Yeah.
And we're using a risk to reward ratio of 3 to 1. Right? So we're risking $1 to make $3. Right? That's what it means. We're risking $1 to make 3.
Yep.
Okay. So with your account, and let's say we have taken about 5 trades for the week, right?
Yep.
We take 5 trades for the week, and we lost, let's say, 3 trades. Barbadian, let's say we lost 4 trades, right?
Yeah.
Right? So that means every time we win in, we make $3. Every time we lose $1.
Yeah.
So we lost all of 3 trades. So that's $3, right? Now, because every time we lose, we're only losing $1, okay, for the week. And we took 5 trades, and let's say we won 2, right? So the 2 trades that we would have won would have let you still be in profit.
Yeah.
Because the first trade that you won would have been $3. The second one would have been another $3. So that would have equivalent to $6. And you would have been only losing $3, right? Even though you took more losses.
Okay.
Right? Now, can you imagine if it was the other way around? Your account would have been in negative. Okay? So that is why I mentioned every time, whenever we come on our charts, we want to have our TP at least 50 points away from the entry, right?
And
our stop loss 30 points below.
Okay.
Right? You will not lose if you continue on that path, because every time you're winning more. Okay?
Okay. So stop loss from the entry point, stop loss 30 points, 50 points for the profit margin. Okay.
Right. Now, we see the term risk to reward ratio, but just to let you know how to understand it, right? Because we see risk to reward. Now, you might not fully understand the risk to reward, even though I did the analysis that every time we enter the trade, we can risk $1 to 3. And we saw this example here. But how you carefully know your risk to reward, okay? Let's say we're risking 30 pips.
Yeah.
Okay? Now, every time you multiply 30 by, let's say, okay, video. So we're risking 30 pips. So if, say, our profit area is 60, right? 60 in comparison to 30 would have been like a 2 to 1, because 60 is twice as much as 30.
Yeah.
Right? If it was like 90 pips, it would have been 3 times what the stop loss is. So that's how you figure the ratio out.
Okay.
Right? Right. So let's ensure that all the time your ratio, which is the profit, or your reward, will be more. Because whenever you lose, it's going to affect you psychologically, right?
Yes.
But at the ending of the week, based on how many trades you took, and you were following the money management rule to have a higher reward than your risk, you will be smiling by the ending of the week. Right?
Hopefully.
That's what it simple means.
Hopefully.
Right?
It
So,
work. Yeah.
Right. So sometimes what would happen as traders, right? We tend to do something like this, right? We try to be smarter than other traders.
Mm-hmm.
Right? Now, just stick to what you know. And once you see what you know, you enter based on what you know and not what you want to see. Right? Let's take, for example, this chart, right? What we did. So you did your resistance, which is the swing point. You did your support, right?
Yep.
We know as a
And then
trader,
trade, yeah. Mhm.
every time you come to the resistance, you should be selling,
Yeah.
right? So you see these candles, right?
Yeah.
What is happening now? Most likely you would have entered for a sell,
Yeah.
right? But why are you selling? You're not 100% sure because you only know that it's because you're at the resistance,
Yeah.
right? But to be sure, why are you really selling is when you get the patterns,
Okay.
right? So don't just enter the sell because you're at the resistance, because you see what happened here?
Yeah.
It went past it because there were no sign it's gonna be selling.
Yeah.
But you, as a trader, because you saw it at the resistance, you open up a sell. No. If you do that, you could be in some serious problems, right?
Yeah.
But not to worry, the greatest thing that would have saved you is your stop loss, right? Once you have your stop loss in, every trade should have one, every single one. Once you have those in, you would be in not much danger. But this is what it looks like to trade what you think think the market will be doing, which is to drop. You want to trade based on what you're seeing and not what you think you're seeing,
Yeah.
right? So you notice no engulfing to sell. So most naturally, you will never open up a sell position as yet, okay?
Yeah.
But as you know, some traders will try to be smarter than the rest of the traders by jumping in first, right? So you want to be not smarter than the rest of the trader, right? But you want to be smart about entering your trade, right?
Agree.
So you want to be entering based on what you're looking for, okay? Once you identify your pattern, okay, and that satisfy your condition to trade, you can now execute your trade with confidence. Okay? That's right. Because you don't want to be jumping in because, okay, as you know, if say we were at the resistance, because at the resistance level, you could have made way more money than waiting on the signal.
Yeah.
Right? But that's what a trader who's trying to outsmart all the other traders to jump in first. No, you don't want to be doing that. Okay? You want to be patient. Take your time to analyze what is really happening. Okay?
Yep.
If you don't see a situation for you to sell, do not open up a sell position, even though you marked up your swing point, right?
Yep.
That's right. All right. So let's see. So this is just another illustration here to help us out that they have this thing on our chart for the resistance. They call it the supply area, right? So usually we have the support as the demand. So usually it's like let's take and consider maybe let's say water, right?
Yep.
So let's say based on the price of water in the community, if say we have a lot of persons who were buying it, right? It will go up. Well, not go up in let's say price, but it will now need to be in supply because it had run out, right? There's no more water, so we're gonna need to supply water in the community. But that's just the general idea of the resistance. It's the supply area. Right. So whenever the supply gets sufficient now, right, what's going to happen is going to be able for us to sell it back to the consumers. But guess what? At some point, the supply will run out. And that is why the resistance, not the resistance, but the support, they call it the demand. Right? At the demand, we're expecting more persons to jump in to pump the market.
Okay.
Right? That's the general concept. But if you don't want to use that concept, the plain idea will be here, which is your swing point for resistance, support for buyers.
So it's like swing point versus resistance versus the supplier area now that you mentioned. Is that correct?
Right, the supply and the demand, but it's the same thing. So it's just a different name.
A different
same
name
thing.
that
So
they
swing.
use. Different name that they're using just to describe that. Okay.
That's right. So if you hear someone talking about the swing point or the supply, they're talking about here.
Yeah, exactly.
Which is the resistance.
Yeah.
Right. If you hear someone talking about the support or the demand, they're talking about
that
here.
point there. Yeah.
Right. That's right. Because when things are in demand, it's going to go up, right? Everybody wants Euro USD, it's going to go up. But if they no longer want it, right, because they already got it, it's going to drop.
Okay.
That's what the general idea is. All right. So as you can see, they even warn us that your protective stop target, which is your stop loss, right? So as I said, the stop loss would have been insuring your money on your trades. Right? Now, once you put your stop loss in, right, this will let you be confident that you're willing, because anytime you open up your trade, you must be willing to know that you're willing to lose that money. Right? But because you know that your reward will be great, you will not worry about it. Okay? That's the idea. And this concept can be applied to our everyday lives, right? As long as you know for sure that based on what you're going to be risking for, it's like going to school, right? We know for sure it's going to take some time to go to school, to learn the information, but with that knowledge, you will be able to excel. So that's what the charts is basically telling us with risk to reward. So once you know what you're risking versus the reward, you can enter with confidence. Okay? But sometimes this happens. Our emotion comes into play in our risk management. And sometimes you feel very depressed because you're losing. But as you can clearly see, Mr. Jose, once you are taking enough trades and your rewards are greater, then those losses will not be losses anymore.
Okay.
Right? Not be losses anymore. So it's just to keep the mindset that, number one, never risk more than what you can lose. But they also have it said that you should not risk more than 2% of your equity, which is how much you have in your account. Right? So let's say you have $50, you're only risking 2% of that, the maximum.
Yeah.
That's right. So this is something that we can also use to help us in risk management. Right? But how do we apply it? By this information here. Your TP, stop loss, and to adjust once you're in profit. Those will safeguard you in money management, right?
Yeah.
That's right. And also in money management, you have to know how to count the pips, which we have a clear idea now how to count the pips, right?
Yep.
But what will happen now, in order to count the pips in the money management, will now determine the lot size we're using on the account. Okay, so let's do a quick exercise. Okay.
Yep.
So we're not using the calculator, right? Because we're smart.
Yeah.
Right. All right. So let's say we're seeing this information here, right?
Yeah.
We're selling GBP USD.
Yep.
Now we will be entering using a lot size of 0.01. Okay, 0.01 lot size. You remember what that lot size stands for in dollar figure?
Yeah, that was 10.
10 cents per pip.
Yeah.
All right, so let's say we use that same lot size to make 20 pips. So it would have been 10 cents